This is Alan Bush with the Daily Financial Forecast for Tuesday, November 22nd. Starting out with the stock index futures, in the overnight trade, we did see the major indices advancing to new historical highs. All of this appears to be directly related to ideas that Trump's infrastructure spending plans will improve corporate America. Profitability will be on the rise. So there's a lot of optimism in the indices, and it is, I think, primarily due to plans for a very much ramped up infrastructure program. Also, we do feel that this is a trend that will continue through this year, probably well into next year. So nothing really changing in our outlook for stock index futures. Look for more of the same. In the currencies, seeing the dollar index yesterday coming under a little pressure after Fisher of the Fed indicating that dollar strength could do some damage to the U.S. export business. However, the dollar trading a little bit better today. Of course, it was just several days ago that we did see the dollar index advancing to multi-year highs. So we do believe that with the Fed on track to raise interest rates in December and next year, I think as well, the dollar index should be very well supported. Very little happening in the European currencies, not much news there, but we are seeing the Australian dollar and the Canadian dollar trading higher, even though crude oil a little bit lower. So I would focus on long the dollar index. Interest rate differentials remain very favorable to being long the greenback. Now, moving over to the interest rate futures markets, we are seeing the bonds trading a little bit higher, but a rather interesting response to the existing home sales report that did come in with a 2% increase when a small decline was anticipated. The bonds actually trading just a little bit higher. We'd have to say that that market is underperforming the news to some degree. So we remain bearish on the bond market. This is a trend that will probably last for quite some time. Also, we are fully on board for a rate increase from the Fed at the December 13th, 14th meeting. Quite often, we have been at odds with most analysts in predicting what the Fed might do, but not this time. We believe that the Fed will be raising rates, and of course, the majority of analysts are thinking the same as well. In fact, the financial futures market's predicting now there is virtually a 100% chance that the Fed will raise by 25 basis points at the December meeting. So we totally agree, and I think there will be another rate increase sometime next year. So continue to trade the bonds from the short side. This is a trend that will last, I think, all this year and well into next year. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.